Let's have a quick look into the structure on daily time frame. On daily time frame, it looks like the market has turned full scale bearish. The price of gold is going to dip so massively that it's not just going to be only gold. I think other commodities like copper and silver will follow the same direction. Look at it from the line chart perspective, you will see that it's heading towards a strong bearish drop. So these are daily analysis, has already given us an insight into breakout of structure. On daily time frame, we broke out on daily time frame. We broke out on Monday 13th, came back, retested Tuesday, tested Wednesday, and Thursday sell continuation after breakout structure. Initially, we had here a W structure, like we had here a W structure. Price came back, that's a double bottom, retested the neckline. We had a trust. Price came here, formed a W structure, but failed to upswing from here. Technically, there was a breach. This step was supposed to give birth to an upswing, but the market is dynamic and it will always play very smart and do whatever it likes, and it has done exactly that. It has given us an insight here, a bullish insight after a bullish price action which surfaced here but failed to upswing. So we didn't have the market came, and due to fundamental analysis, the ongoing conflict between Iran and the United States and the shutdown of Strait of Hormuz, and the oil price set seal for higher high. So technically, this affecting the price action, and we are seeing it evident, and you can see a straight downward trend, a straight downward trend, very strong downward trend on daily time frame. And if you look at it from the line chart perspective to appreciate it better, you'll see price creating series of lower low, lower high, lower low, lower high, lower low, lower high on daily time frame. For every touch on the daily time frame, it's a pummel in price, and the current price action shows that the market makers may be having a trap in the zone. So we could have a strong massive flash down, a strong massive flash down before a rally. So to put into perspective, we want to see as a, here as a support structure 1, here as a support structure 2, and they have here as a support structure 3. So I'm technically viewing to see if price pulls into this structure. The two massive weak rejection on daily time frame is an institutional trend. Those two reactions are institutional rejection on a descending trend line and a future demand floor. So technically, it will pull into the structure. Yes, it will be a flash, reset the market with a very strong rejection, and you know, from there we set seal. So you can see price has been given the descending trend line sell leverage, and that sell leverage is watched on daily time frame, which is the most preferred gauge while dealing with SAU USD. So it makes a clearer sense now with fewer lines to avoid analysis paralysis. So it's now put into context. And the next place I expect that buyers should show some buy potential is here. We have a very strong demand floor rejection at this level. So let's see if price pulls into that structure. 3,897. 3,897 is going to be a takedown. But to be honest, with what price has done after breaking out from a key daily support structure, it will be best to wait for price where it had earlier reacted. And the key reaction zone is on this area. So I want to put it into context. That's a retest candle after break of structure, and it becomes support, become resistance in current market price action. So price comes here, you get a massive bounce, and we have another bounce here, and the next one we had here. So technically you see creating series of lower high, lower low, lower high, lower low on a descending structure. Now we have a clear breakout on daily time frame, and our analysis was invalidated here when price failed to break out of structure. Technically, the bearish descending channel was what took price down. Ordinarily, we should have broken out from here and set seal, but that didn't happen. So bearish continuation. So on a lower time frame, look for sell opportunity. Look for sell opportunity only on a lower time frame. So for every opportunity, look for sell structure until we break out from this trend on a daily time frame. So this becomes our key litmus test for bullish reversal. So if you're looking for bullish reversal on a daily time frame, you want to see a breakout from here. So that's a descending trend line. Slash sign of bullish reversal. So if we break out from that structure, then you know that if we break out from here, then we are ready for upswing. But at the moment, the bears are having a very happy laugh based on what we've seen so far. The bears are winning this war. So we're going to have more strong bearish days, and trading is all about experience. It turns out good, it turns out bad, whichever way you take corrections. And so this is what I see technically. We had an invalidated analysis here, and at the moment, so to pitch tent on, let's have fewer lines here. 1, 2, 3, 4. So the next place, which is very unlikely, but let's just give it credit. At the moment, just uh, just look for opportunity and sell your good. That's all I can say for now, because there is a very high tendency that gold will drop into 3,467. Here you will see a massive rally. There is an institutional descending trend line. So it's running. We had it in February, we had it in March, and they will drop and come down here. It's not difficult. In a single day, they have done so, or even in 2 days, price can pummel into the structure before we can now seek for a swing. Do have a good day.